So, just to follow up here in terms of technology, do you think India is doing enough in AI in the banking industry compared to some of your global peers? And if not, what more do you think needs to be done?
Please understand that there are large number of banks which are much bigger in size than us. There are large number of banks which are based in, for example, US or China, where the advancement in AI has been, obviously way ahead of the rest of the world. And they have been investing in AI for some time, and the kind of budgets they have are much larger than us. So for me to sit here and say, oh, we are keeping pace with some of the largest banks, I think it will be quite unfair to say. Are we catching up? Yes. We can do some of the things they are doing at price which is much, much cheaper than what they're able to do at. I think in the next 6 to 12 months, you will see us not catching up, with but definitely the gap between us and them will be quite low. You hear some of these banks talk about huge amount of investments. You hear some of these banks talk about huge amount of savings they are seeing and revenue enhancements they are seeing. I don't know how much of it is true. I don't know whether it is coming through or not. I don't know whether it is double counted or not. We are also investing in AI in a big way. Right now, the results of AI are definitely positive, but nowhere close to what we anticipated when we started. We are realizing that it's a hard journey. You might get a certain savings and certain benefit upfront, and then you have to keep working on the margin to ensure that the full benefit comes through. And full benefit does take time. It is not as if you're buying something off the shelf and just implementing it here and suddenly the whole thing just starts working wonderfully. You have your own technology stack. You have own, India has so many languages. India has own tonality. People talk differently. You have English here. People will test you all the time. In many cases, Indian customers don't want to talk to, for example, on the call center side, to AI. They don't want to deal with it. So there is a lot of work to be done. Can I confidently say that in the Indian banking system, we are at the cutting edge? Yes, I can confidently say that. And the reason I can confidently say that is because if you go and talk to some of these global players who are seen as AI majors, from an Indian perspective, they will definitely take the name of Axis Bank, which seems to be doing a lot in the area of AI. It is an important moat we can create. So for us, as the third largest private bank, it is very, very important that we are ahead of the curve in terms of investing in some of these areas, and which we will do.
Fair enough. 100% agree. In terms of some of the issues that investors have, right? I'm just going to pick them one by one. And you can correct me if I'm wrong. Your loan growth has largely been led by corporate lending, not so much retail lending. Retail lending has been slightly on the slower side. Is that a deliberate move? And some people believe that Axis Bank is pursuing growth at the cost of profitability. Is that a right way to look at it?
When the deposit rates were constrained in the market, it was very clear that we had to decide what the waterfall had to be. Because if you can, let's say, grow by, I'm just putting a number there, 15%, then I have to look at all the businesses I have and try to grow the areas where the return on capital or return on wherever I assign those deposits will be the maximum. And then we were also hit with the retail cycle, where very clearly on the unsecured side, you saw losses creep up quite rapidly in the system. In that scenario, it made sense for us to definitely reduce the growth rates of the unsecured side and grow more on the what we call the CBG, or the let's call it the mid corporate to the small businesses, and focus more on the wholesale side, because it was important, because wholesale is not just about lending. Wholesale, you can create a much more wholesome relationship through trade finance, through FX, through corporate salary accounts, and so on and so forth. So we had when we were deposit constrained, we had stopped lending on some of the secured side because the return on capital was lower. Then the retail cycle hit. Unsecured also was an area where we had to tighten our credit standards. If we wanted to grow, wholesale was the best place to grow. If you look at our last couple of quarters, the disbursement growth on retail is back. As the retail cycle has settled down, the losses have started coming down. We have not suddenly opened up our underwriting standards, but now the customers are coming back and we are able to obviously provide them those loans. We are also quite confident that there was in case of at least Axis, the share of wholesale was much more than what was necessary. So we had to grow our retail up to a certain size. And that's why if you are deposit constrained, growing mortgage at low spreads did not make sense. Now we have reached a bit of an equilibrium. You will see wholesale growth to be higher than the retail growth in terms of AUM or in terms of balances for some more quarters, because you might grow the retail assets, you might disburse much more on the retail asset side, but for it to reflect in the overall assets will take some time, because you have a leaking bucket in terms of prepayments and repayments, etc., etc. So I do very strongly believe that the growth on the retail side will come back, and then over a period of time, both wholesale and retail will start growing at similar rates. You might see some asset classes growing at a slightly faster pace and some at a slower pace, but both have to grow. We are a very large wholesale player. If we find the right opportunities with the right return on capital, we will grow that. Is it at the sacrifice of profitability? End of the day, all this does not make sense if you're not making money. So obviously, we have to do it in our overall scheme of things, where we look at where do we deploy these deposits, where do we deploy the capital, and we are deploying it in the medium to long term in the right areas. In the short run, you might see wholesale is growing faster. In short run, you might see, the asset size on the retail side is growing at a certain pace. But overall, in the middle to long term, you will see an equilibrium in terms of our wholesale and retail, sizing, and the pace at which we are growing various asset classes.
Will any of that come at the cost of margins? Because if you look at the margin profile as well, compared to peers that are perhaps growing faster in retail, their margins are picking up much more. So do you think in the meantime, since wholesale is the focus area for you, will it come at the cost of margins?
So, yes, there will be some impact on margins. I can't take that away, because obviously the net interest margins you make on the wholesale side of the business are lower than what you make typically on a retail side. But as I said, it's temporary. Over a period of time, we do expect the disbursement growth in retail is already picked up quite healthily. So I do expect it to come back. We have been telling the market that our long-term net interest margin number is 3.8 from a through cycle perspective. We are lower than that, but we are quite confident we'll get to the 3.8% over the next 12 to 18 months or so. Now, please also understand and appreciate that one of the reasons why net interest margin has been hurt for all the banks is that the interest rates have been cut at a certain rate that has not been reflected in terms of the deposit rates or the cost of funds. So on one side, your yield has gone down, but on the other side, your cost of funds has not moved on at the same pace. And as a result, the net interest margins for almost every bank has got squeezed. We are in the same boat. Yes, in our case, maybe it has got enhanced a little bit because our wholesale side has grown slightly faster than the retail side. But it will all normalize over a period of time. And growing and becoming more relevant on the wholesale side, I do believe, because so many banks have vacated the space or they're only lending and they're not providing all the other services, is a great strategic opportunity for us, because we can become even a bigger player on the wholesale side in terms of not just the loans, but the overall services which you provide to our corporate clients. And that is reflected in the surveys which you're doing with our clients, where we are rated very highly. Our ratings are only going up. I go to many corporate clients where they're saying that you are the first banker we turn to, and it will pay for us in the long run in more ways than one.